Hey, good morning. This is Mayor Valensky with Driving Markets. Remember, anything said in this piece is an opinion only, so let's kick off. So China came out with this modest growth report. The Chinese markets are slightly down. The Shanghai index is slightly down, and the Shenzhen composite is slightly down. The Hang Seng is also slightly down because the markets expected a more aggressive economic report than was distributed and produced today. Now, Japan Topics is slightly up by 1.21%. Okay, and tomorrow you've got the Reserve Bank of Australia coming out with the interest rates. Markets expecting a 25 basis point rise. That's more or less covering the Far East. As far as the US is concerned, what you've got now is you've got the futures are slightly ticking up. You've got Jerome Powell giving some major commentary this week, so everyone's going to be watching on that. And you've got the big number on Friday, which is the non-farm payrolls. Okay, so that is a massive number. They're expecting a cooling off of that number. Remember last month it came in at 517,000 and expecting 190,000 or 200,000. It came in a lot higher than expected. If the number comes in higher than expected on Friday, then it can really see the Fed increasing interest rates by 50 basis points. If it comes in as expected or lower, then what you're going to have is you're going to have probably a 25 basis points rise in March by the Fed. I don't trust the rally on Friday. As I said, we're going into a bear market. Anyone who's worried about a recession should really be buying the US 10-year treasuries or buying bonds effectively, because they're going to be a hedge against recession. And I think we are going to go into recession, and any rally at the moment is an opportunity to sell into. The reason being is because the valuations of the companies as they stand at the moment is far too high. And I want to focus a little bit just on the high-tech sector. All of the companies there, the valuations are far too high and need to come down significantly. So I expect equities in the US and in Europe to fall over the next 12 months. I do see a recession in 2023 worse than 2008 and worse than the dot-com crash of 2000. Those who are old enough to remember those particular crashes. Those who aren't, then you've never experienced a bear market, and therefore you're going to have difficulty handling yourself within that bear market. Just touching a bit on cryptocurrencies, the Silvergate scandal, the Silvergate crypto bank scandal is sending shivers down the cryptocurrency sector, depressing and suppressing the prices within that sector. There's going to be more scandals going forward. There's going to be more companies going bust. They haven't finished with the Gemini or the FTX Sam Bankman-Fried scandal. And there's going to be more companies that are going to have difficulty reporting or going to be identified as having cash flow problems, and that's going to continue rocking the boat as far as the cryptocurrency sector is concerned. On the foreign exchange markets, you're probably going to have a slightly weakening dollar with anticipation of rising interest rates in the Eurozone, but over a